This is the report, the Ichimoku review for November the 29th. So, what was remarkable? Volume. But of course it is the day after Thanksgiving. Not a lot of very active traders busy, so it's the computers that were working. But look at that, terrible volume. But we closed at 1 p.m. in the afternoon, which made it even tougher on volume. The advancers clearly were behind the decliners by a factor of 2 to 1. And the reason that is significant is because it brings us back, well, let's update this to November the 29th. And it brings us back below the zero line. So we're just churning, just like we did back here in August, like we did back here in May. And both of those finish their churn by going lower. Doesn't mean it'll happen again this time, but we've just got to be aware of that. The S&P, what you can say is that trend line that we drew on a monthly chart that went all the way back to 1994, and this other trend line from January 2016, it's the 2016 trend line that acted as resistance, and the 1994 trend line that acted as support. So we've got this interesting type of pattern here. When we were building into it, we weren't watching this pattern, but we fell out of it. So we churned in it for a whole year in this pattern, down to the bottom. We also hit the 200 daily moving average, even though this is a monthly chart, this is a daily moving average. But we went down and up, and then we fell through. Now we came up again in March, but that trend line was resistance for 2 months, and then a third month, and then essentially a fourth and a fifth and a sixth. And it wasn't until November that we broke through and we were stopped by the other trend line. So we're going to have to keep an eye on both of these, a long-term trend line and a short-term trend line. Caterpillar, nothing much to report, but I have a visitor. Low volume. Home Depot. I got out of half of my Home Depot yesterday. I'm sorry I had visitors and I didn't tweet that, but it was a trade that profited by about $450, but why not hold on to that one and let's see what happens on Monday. And it was this Chiku span of the prior day, Wednesday, that proved to be resistance right on the cloud. And then the 8 EMA. So both of those coincidences and the 38.2%, all those three things proved to be too much to overcome. And we probably should have sold as soon as the day started, but the drop was, I think in Home Depot, was fairly immediate. I'm still holding on to 5 of the 222.5 and 232.5 December long verticals, and let's see what happens. I do believe that it's still a good news story for Home Depot going into the holidays. This 50% fib line and the bottom of the cloud are what we need to look at next. So let's take this line and let's move it down to here, and that's the one we're going to look at next. And let's watch the Chiku span as well. It could come as low as 217.52, but I'm expecting this to be support. So I'm going to put a marker there, and this is what we're going to keep our eye on next week. AT&T down 28 cents, still struggling in the cloud. The Chiku span had rejection off the bottom of this candle and now stayed below. What's going to happen now? That's a lot of range for it to fall under. So there's an opportunity, particularly if the market is down, people will move towards a 5.3% dividend stock, and we could see AT&T moving up. WDC, perfect doji day, incredibly low volume, but remember, half a day of volume. Whirlpool down 225, so still a very struggling stock and nowhere near, and it lost support. Chico-Span lost support in the cloud, so nowhere near anything that we would want to touch. And Amazon just had a reversal day of the day before. So going to keep it to 5 minutes. Let's see what happens next week. But the S&P is playing in this mirrored wedge here, so let's keep an eye on it.